All right, folks, strap in. We're talking Tesla today, TSLA, a stock that's always got everyone buzzing. After some wild price action, the question on everyone's mind is the bottom in? We've done a deep, multi-step analysis, and I'm about to reveal everything you need to know. So, what's the market saying about Tesla? Well, it's a high-growth, high-volatility story, isn't it? The big narrative right now, the one that's really moving the needle, revolves almost entirely around the execution of Elon's ambitious FSD and Robotaxi initiatives. People are either hyped about Tesla becoming a trillion-dollar AI and robotics company, or they're skeptical, viewing it as just another car manufacturer with shrinking margins. It's truly a show-me story on the autonomous front. First, let's get our facts straight on what Tesla Inc. actually is. They design, develop, manufacture, lease, and sell electric vehicles. That's the automotive segment we all know. But they also have a significant energy generation and storage segment, dealing with solar and battery solutions globally. So they're not just a car company, they're an energy and, increasingly, an AI software company. Now, management's forward guidance, especially regarding autonomous ride-hailing expansion in the US and international FSD approvals, is incredibly aggressive. They're painting a picture of a company rapidly transforming, which sets the stage for our analysis. Now, let's get into the nitty-gritty of our scenario analysis, where we reconcile that ambitious market narrative with Tesla's core business and future plans. We've baked in those high expectations for FSD and Robotaxi into our growth projections, but with a dose of reality across our three cases. First up, our base case, which we're giving a 35% probability. This scenario assumes Tesla successfully launches Robotaxi in key US cities and gradually secures FSD regulatory approvals in Europe and China within a reasonable time frame. This would accelerate EPS growth beyond traditional automotive manufacturing, but we still expect continued EV competition. Tesla's innovation in software and energy should maintain its premium position, and the recent technical breakout we'll discuss in a moment also supports this positive outlook. To calculate the fair value, we started with the current TTM EPS of 173. We then projected a one-year EPS growth rate of 25%, reflecting that initial success in autonomous deployment. That gives us a projected EPS of $2.16 for year one. We then applied a forward PE multiple of 180x, tempering the current sky-high PE but acknowledging the continued innovation and software potential. This leads us to a fair value of $388.80. Next, let's jump into our bull case, which we're assigning the highest probability at 45%. Why so confident? Because the technical breakout we're seeing on the charts strongly reinforces this highly optimistic outcome. This scenario envisions Tesla executing flawlessly on its Robotaxi rollout in the US, hitting that ambitious half-US population by year-end goal, and securing swift FSD regulatory approvals in Europe and China. This would truly unlock massive, high-margin software revenue streams, fundamentally transforming the company into an AI powerhouse. The energy segment continues its rapid expansion, and production efficiencies improve, leading to significant margin expansion. For the valuation, we again start with the current TTM EPS of 173, but here we project a whopping one-year EPS growth rate of 40%, reflecting that hyper-exponential growth from successful Robotaxi and FSD monetization. That brings our projected EPS for year one to $2.42. Then we apply a forward PE multiple of 220x, acknowledging Tesla's successful transformation but still slightly below its current TTM. This gives us a fair value of $532.40. Finally, we have our bear case, which we're giving the lowest probability at 20%. The reasoning for this lower probability is crucial. The recent bullish technical breakout suggests that significant immediate downside is less likely without a strong, unforeseen negative catalyst. In this pessimistic scenario, regulatory hurdles for FSE and Robotaxi expansion, both in the US and internationally, prove to be significantly more challenging and slow than anticipated. Intense competition in the EV space continues to erode margins, and production ramp-ups face unforeseen issues, leading to a failure in the shift to a high-margin software company. For valuation, we used the current TTM EPS of $1.73. We projected a more modest one-year EPS growth rate of 13.44%, essentially assuming minimal additional impact from FSD/Robotaxi due to delays and failures. That puts our projected EPS for year one at $1.96. We then applied a forward PE multiple of 100x, reflecting slower growth and a more cautious market valuation for what would largely remain an automotive company. This yields a fair value of $196. All right, let's pull up the chart. Here's what I'm seeing based on our technical analysis. TSLA has just broken out from a multi-week holding pattern. This is a significant bullish signal, and if there are no negative catalysts to derail this momentum, we could be heading towards the 490 mark in the next few quarters. This technical strength is a big reason why we've weighted our bullish scenario so highly. So, after weighing all the scenarios and looking at the probabilities, is the bottom in for Tesla? My verdict is, the bottom is likely in, provided Tesla continues its upward momentum, fueled by consistent progress in its autonomous driving ecosystem. The bullish technical pattern we just discussed aligns perfectly with our higher probability scenarios. We're looking at a company poised for a significant transformation, and the market seems ready to reward that. Given our analysis, those potential fair values range from $196 on the low end to $532 on the high. Our base case is $388.80, and the technicals are pointing towards $490. For investors looking to get in or add to their position, watching for dips towards that base case level of around $388 could be an interesting entry point. However, the momentum suggests we're aiming for higher, so keep an eye on consolidation around that $490 technical target as well. All right, my friends, that's our deep dive into Tesla. What do you think? Are you bullish, bearish, or somewhere in between? Let me know in the comments below. And if you found this analysis helpful, smash that like button, subscribe to the channel, and hit the notification bell so you don't miss our next episode. Now, before you go making any investment decisions, remember, this is for informational and entertainment purposes only. I'm not a financial advisor, and this isn't financial advice. Investing in the stock market involves risk, and you could lose money. Always do your own due diligence and consult with a qualified financial professional before making any investment decisions. Seriously, folks, protect your capital.